of the wood slide. New. What's going on, guys? Happy Friday. Welcome to the stream. This is Obe TA.
Hi.
A technical analysis to the charts here. Scan the charts. Look for some good opportunity. Hope you guys had a good week. A lot of stuff going on here. I'm going to get into it, but I think I'm going to do it a little bit differently. It's going to be a little bit more of a chill night, just kind of hanging out. And dude, I'm just going to go through whatever the hell I feel like it. Normally, I'll have a bunch of coins and assets kind of ready to go that I've been looking at. I'm just going to literally show you how I scan the markets and analyze, right? How I plot my support and resistance and all that kind of stuff. So we'll start off with the OG Bitcoin as always, but make it a fun stream, man. Anybody comes in here, say what's up. Dude, if you want me to take a look at anything, throw it in the chat. It's all free. Just here to hang out, have a good time, man, all right? So without further ado, let's dive in. Shall we? Yeah, man, so taking a look at Bitcoin, and it had a fantastic day. So on the day, candle closed, what, about 42 minutes ago? So it was up about 2.33% off of the crazy day that we had yesterday. Of course, you know, Russia invading Ukraine, and now the Fed, if you saw JJPP on the front, talking about how because of Ukraine, they might be a little modest with the rate increases. So literally it's like just that's how I feel right now, because as a trader in markets, you need to take into consideration the overall kind of narrative of the market, the feel, right? In a raised rate environment where they plan on raising rates, you usually can expect some contraction of the market, right? The growth stocks slow down a little bit, tech and all that kind of stuff. So you take positions accordingly, right? And as I'm speaking right now, shut up. Bitcoin is literally going through 40,000 literally right now. I'll get back to that in a sec, but Bitcoin is literally pumping right now. Let's go. Over 40,000 at the moment. All right, and what we're looking at here, move it off to the daily just to see what we're doing right now. Let me get price back on here. So what's happening right now is that back from late June, just this giant harmonic that we had, or that we have, the bullish shark harmonic here, and it's a little bit wonky, but it's pretty damn close. Okay. All right, so down to the 886 reaction. What is happening is that we are getting a higher second low. So when you have a harmonic like this is just one thing about harmonics. The pattern completion zone, which is point D, is where you can expect to get the reaction. All right, so you get the initial reaction to the upside, you know, wherever that might be. But what you really want is what is called the type 2 return. That's when price comes back down and creates either the same low or, even better yet, a higher low. So this is really good as far as what the price is doing. Now, it would be nice if we weren't in war times, I guess, and the Fed wasn't flip-flopping on raising rates every other day. That would be really nice, but as far as technical analysis goes, man, you have hidden bullish divergence down here on the MACD, which is just let me map it out for you. So it's and let me make this a little bit. Right, so you've got a higher low going on in price here with lower lows on the MACD, all right? And it's developing, it's continuing to the upside, right? So what's happening here is at the type 2 return, which is good, you're getting a higher low than the first low. That just is a sign of accumulation. That's really good. You're also getting a continuation signal on the MACD here, which implies on a daily time frame continuation to the upside of this trend. Okay, and really until and it's fully developed once it goes green. So I mean, you've had 3 candles. That's pretty good, but it's not even fully developed yet. So you're now testing 40,000. But dude, with that, at the second low here, the higher low, that's really good as far as technical analysis is concerned. You get a continuation, and the fact is you're still developing the momentum, I guess I should say, at 40,000. 40,000 is a major support resistance that you want to break. So dude, you break that, 45,000 is the next target, right? 44.5, this high back here from January 13th. So it's looking good that it's going to break 40,000, and if it does, then you come up to 45. Whether you get a pullback before that or not, I don't know, but then come down and hold 40,000, and then truly once you get above 45,000, like officially, because you never did, right? Back here, you never did get above it. Okay, so like the bodies did technically wiping out that hidden bearish divergence, but you never like hit a discernible higher high. You double topped and then sold off, which was bad. That didn't look good. But now you're getting the continuation to the upside, the higher low after a harmonic. And not only do you have this harmonic, you've got a bullish bat harmonic that developed after it, right? You've got this M shape going on here. All right, so you've got this. Not perfect, but dude, I mean, dang, it's there. Okay. And another 886. So it's like, you know, confirmation low after a giant harmonic with another bullish harmonic inside of that. It's really good with continuation factor on the oscillator. That's what we're talking about. Nice. That's exactly what we want to happen. So this is really showing that this is the start to the rally. Okay. Now, where it goes from here, I don't know. I do think that 40 is going to be broken, and we're probably heading back up to 40, 45. Okay. Now, if we reject off of that, okay. Come back down, hold 40 before continuing again to make that higher high and really kind of confirm that we're in a bull trend, at least until about 50,000, I want to say. Because then we just go, we throw the Fibonacci back on this thing from the all-time high to the low, right up in that golden zone, okay? That's the major area that we see reversals happen oftentimes, so interesting stuff. And really, we've kind of got another W forming here. So the way to size this out, as far as a harmonic is concerned, just throw that Fibonacci in there again, right? So you start at the point that you applied the Fibonacci, next point goes to where you stop. So it would be something like this. Almost kind of, it's not even really to the 382. So it's, again, it's a little weak as far as a harmonic goes, but the 886 up until like the 86 here, right? This would just be what's called the bearish bat. That puts you up around 65,000. So I mean, if we are in a true bull trend again, the bottom is in off of this double bottom kind of stuff. Yeah, dude, we could be seeing a move up to those kind of levels. These are the ones you'll need to break first, 40, 45, right? But yeah, you get above that kind of stuff, you've got a very strong chance of getting up into this zone. 50,000 is right at the 50% retrace. Okay, Fibonacci. And then 55.8, about 55.6 back here. And then that's when you start getting back in line with these supports back from early 2021. We're looking at support resistance. This is how you size it up. Look for the peaks, the valleys. All right. Peak here. Okay. And then when we're talking about Fibonacci, now that we have the horizontal lines going on here, when you throw this Fibonacci down from the high to the low, you look for areas of confluence. So you look for areas that line up at Fibonacci levels with historical support and resistance as you can see here, the 786 from the high to the low does line up with this high back here from March 14th. Okay. So that would be an area to look out for. As far as strong resistance, that's up around 62,000. Okay, we're way off of that. So we don't need to be thinking about that really. We just want to start with breaking 40,000. Because you need to remember the way you can tell whether or not you're in a bull trend or a bear trend is that when you're in a real bear trend, you'll get bullish signals. You'll get bullish harmonics, all that kind of stuff, but they will perform poorly. So as long as the bullish harmonics and the bullish indicators, the bullish divergence, all that stuff is performing poorly and just getting you back to resistance before rejecting, you're still in a downtrend. That's how you know that you're still in the prevailing trend, right? The actual downtrend. Once you start breaking resistances and the bullish harmonics start pumping hard and you're starting to see bearish harmonics perform poorly, then that's a good indication as to what type of trend you're in. So actually, let me take a look at this. That comes up to like the 618. Down to the 886. All right, I mean, look, you have a bearish Gartley presenting itself around 48,280. All right, which is this also has a support level right about here from April 25th. So this is something to look out for, okay? All right, you've played off of point C on that. Now you're potentially working your way up to 48,786, the pattern completion zone of that Gartley, at which point, if this is still a strong bear trend, downtrend, you would expect a strong rejection of that level. All right, so this is kind of implying with the double bottom, hidden bullish divergence. Now we're seeing these wave movements. Okay, we're seeing potential rise up to that D point at 48,000. Is something to keep in mind, and you're going to go up, pull back on the way, but not bad for what we're seeing here. Looks plausible. Cool. That makes sense.
Nice.
Hope so. All right, let's move to the 4 hour. 4 hour, you can just see the range harmonics clearly. Wish it would just unless I wanted it on the time frame, I wish TradingView would just keep it on the one time frame that I actually put it on. That would be nice. They like to make life difficult.
Nope.
As I was saying though, what I'm talking about with Bitcoin, and this is the thing, it's hard to trade and be confident in positions with the type of narratives that have been happening. So while the TA looks great, it really does. Like this bottom higher low with divergence, it looks really good. The fact that they keep flip-flopping on raising, because if they come out now, it's like the narrative is, oh, I don't think we're going to raise rates. So now people are optimistic, they're happy, you know, they're going to be buying the risky assets again, tech will get some love, right? And Bitcoin still follows the stock market, the NASDAQ, it still follows it. So if the NASDAQ and the S&P and all those things are pumping again, Bitcoin is going to be feeling the love and pump again. In that environment, yeah, Bitcoin gets up into 50,000, it gets up into that level. But at any point, because they still need to raise the rates, the reason for needing to raise them in the beginning has not changed. It hasn't changed. It's not like inflation is going away because Russia went to war with Ukraine. It's not going to happen. So they still need to fight the inflation problem. But now they're just coming out going, well, because of Russia, we don't think we're going to raise them really like we said we were going to. And it's like, okay, well then how are we going to deal with the inflation that is still going on? It literally doesn't make any sense. It's just, and with that kind of stuff going on, it's just, they could literally come out tomorrow, Bitcoin's at 40,000, and go, on second thought, our models indicate that we do need to change and raise them, and we actually need to raise them even more than we thought. So yeah, even more increase as far as it's just gonna, the markets are gonna react again. They're gonna dump, and Bitcoin's gonna reject 40 and head down, and the technical analysis will be, you know, it will not be adhered to. It won't be followed, and it's just tough, man. It's tough. This all looks really good, and you want to take this, you want to buy this, but there's just so much crap going on. It's so hard to keep track of anything that in an environment like this with this many news-driven catalysts is like a headache for technical analysis. Man. Tough. So, but if we keep it technical around here, this looks good. All right. So, through to the 4 hour, I want to see a little more close. See what this. So look, like there's no bearish divergence right now. Okay, you're at a high, the higher high on the oscillator. Same thing on the RSI. So it's not even like you're showing exhaustion at this level, approaching the resistance, which is good. All right, actually, so you don't have. You've got like less. You don't even have a divergence on the oscillator 4 hour. There was no class A bullish divergence, but really nice reaction off of this little 4 hour bat. That was nice. Where you at? There it is. Let's go. But yeah. So, 4 hour, positive momentum, and just building again. No bearish divergence. Cool. Don't take the position yet, right? You want to break 40,000, then on the way back down, on the pullback, as you will get. That daily hidden bullish divergence might send this thing up to 45 pretty, if it breaks through. But, yeah, generally with this kind of stuff, breaking through, you let it do its thing, let it pull back. On the 4 hour, we get like some hidden bullish divergence or something, then sure. Okay, then we can take the trade. Unless the Fed comes out again and says, actually, we're raising rates, right? And then it dumps. Could happen, but 4 hour looks fine. Move to the 1 hour. Same thing. Just bullish convergence. No divergence or anything like that. Yeah, notice how that pulled back and tested this trend line on the moving averages. And stream brought to you by Voodoo Ranger, by the way. We worked things out, patched over some rough areas that we had. Billions were deposited into the account, and not really. Okay, get sued for weird reason. That good stuff. Okay. Anyway, yeah, no exhaustion on the 1 hour, no exhaustion on the 4 hour. Daily implying continuation to the upside at resistance at confirmation low after a mega bullish shark harmonic with a little bat harmonic thrown in the end. That's pretty damn good, man. Alright, so this thing could go nuts. Could pump straight up to 45, 44 again. And, I mean, really, if it does that and breaks above it, that's kind of your indication that a real rally is happening. And I'm talking up to like 55,000. maybe even up to like 60 at that point. You've got this A point back here, this peak, definitely going to be a point at like 53. 52, 180, it's the same as this September 26 area, so that right there, like this golden zone is going to be a beast of resistance. You've got the 200-day moving average waiting for you up around 49.2, so there's a lot of areas that this could reverse to the downside. And again, who the hell knows? A nuke gets set off, might as well just nuke this chart. All right. I don't know about all that, but like, yeah, if there's like a nuke reported, that's what I mean, man. It's like, what do you do?
Confirmed.
Plus some bullet holes were gonna show up in the chart. Whoops. Whoops. Oh man. Hey Putin, you wanna call it off and have some peace? No. Okay.
It'd be a lot cooler if you did.
It would be cooler. Alright, let's see. Bitcoin, let's take a look at the weekly because we can. Alright, so the weeklies more interesting. Let me off of the week, not so cluttered up. Whoops. Whoops. Again. Right. Where we at?
Right.
All right, so the bullish shark on the weekly. All right, the thing is, there's no like bullish divergence. So the reaction is nice, and the one thing you need to consider with the bullish shark harmonic is that it always has the potential. That's another thing. I literally just realized that now. The shark harmonics turn into what are called bearish 5-0s. So this bullish shark harmonic, which again, it's a little off, C point's a little bit high, but it's close enough in my opinion here. Giving it that 5% buffer area, it's pretty damn close. This reaction here up into the 50% range. So at 50,000, dude, 50,000 is no joke. 50,000 now has the bearish 5-0 harmonic there. And we can move it to that looks insane. Gah. Let me get this out of here. Yikes. All right. Pull back. I literally keep putting the wrong time frame. There we go. All right, so here's the thing. Off of this bullish shark, we get the reversal and the continuation. This is just another, just kind of a wave that would suggest we're getting up into the 50% retrace, which is 51,168, right? 50,000. So you now have the pattern completion zone of a bearish 5-0 as well up here. Okay. Also historical resistance. The 200-day moving average is around there. We'll see, man. We'll see. And what is interesting about that is that looking at the Wyckoff accumulation schematic, I tweaked it a little bit just for what price seems to be doing. It just gives a good let me just show you. All right, so this is the accumulation. This is Wyckoff, and Wyckoff talks about the composite man, which is basically just institutional money, investors, the whales of crypto. So price in an accumulation phase, given that this back here was a distribution phase. Okay, I'm pointing the selling climax down to 32,000 for the reason that we have now made a higher low. Okay. So seller climax, automatic rally, slightly higher low. Now we would be moving up. This is in phase B up to this point up here, all right, which is like the peak before another sell down to what would be actually a lower low, is how he describes it down here, which is just like a test to really try and, it's like the last point of supply, to try and shake out the retail traders, right? It's gone to 50 and that's it. We're in a bear trend. At that point, you're looking at a chart that looks like this, right? Just looks terrible. But down at 32,000 or 30,000 would be the prime time to be getting in on the asset. And I would not be surprised in the slightest if Bitcoin gets up to here. This is not like a one-to-one. This is not, you know, set for any time frame or anything like that. It's just to observe price and it following this type of pattern. If we get up to 50,000 and the Fed suddenly comes out that they have to lower or they have to hike rates or blah, and we start dumping, you're seeing, dude, it would just be following what Wyckoff talks about, which is that institutional players manipulate the market in this way. And you can take a look at the Wyckoff accumulation schematic. This is how it's drawn up. They manipulate price in this way because it's the most effective at psychologically shaking out the retail traders, the people that are unaware of this. The best way of making them think that it's over down here, so they all are selling while they buy, and that, you know, it's time to get in up here. Okay, it's the opposite. So I'm very curious now that we've gotten to this slightly higher low, and they're talking about easing off on rate hikes, that if it does in fact follow that, what that daily's looking like, and get up to 50,000, get to the bearish 5.0, the golden retrace area, all that stuff, and then the narrative starts to change again, then at that point, dude, I'm out if that starts happening, and I'll see you back in around 30,000. Okay, this could take weeks, could take a while. I don't know, but I would suggest just having this on a chart to watch as it moves. Okay, I'm just saying, kind of interesting. It happened back here, back in May to July. Right, this was an accumulation phase before the run up, and that's the thing, right? You get your test up here, which would have been June 14th for this, before selling off, making a lower low, and then running, right? And then getting this kind of stuff, which is phase D, before really going on that bull run to all-time highs or whatever. Is it going to be 100,000? I don't know, maybe. This isn't, again, this is not a one-to-one, but if we were to throw Fibonacci from the high to the low at 30,000, let's say it got back down there, we're talking about a run up to, I mean, what did it do back here? Where'd it get? It got to at least the 113. 113 would put you up around 75 grand. That's like a minimum target for a real bull run, new all-time high kind of thing. But you could certainly get up into like the 1618 area. Yeah, sure. I don't know what the hell the environment's going to be like there. I don't know. I might be in Ukraine myself. Wherever. Hopefully there's not like a world war going on at that time. But yeah, we'll see. We'll see. That's Bitcoin though, man. Take a look at Ethereum. You know what? Let me do this. If I'm gonna do this, I want to do it right. I'm just gonna clean it up. All right, so you can see. All right, I'm just gonna start with a fresh Ethereum chart here. Let's move to the daily, so I can just show you how I do that. All right, if we're just looking at a plain Ethereum chart, blow it up. All right, we're looking at Ethereum here. Here's how I size this up. Lagging a little. I'm lagging. God damn it. Can you stop lagging, please?
It'd be a lot cooler if you did.
Good enough.
That's not good enough.
All right, here's how I size this up. Go to the major peaks, right? The discernible, obvious lows and highs. Down here, 1, 2, 3 touches, okay? 1,717 is a strong level of support. Okay? This peak back here, February 19th, right? That's right around $2,000, 2,025, boom. Okay, the obvious swing lows and swing highs, right? And that the peaks and valleys are where you want to place your support and your resistance. All right, we're up here. So where are we looking for resistance here? We're talking about this peak back from February 9th, certainly. And then the high that we needed to get above to wipe out the hidden bearish divergence, which is now underperforming, which is a good sign for Ethereum's price as well. But that high as well, which is around here. Okay. That is going to be your lines of resistance there. And then, I mean, you don't have to throw all of them on. Like, you don't have to do this peak and this peak and this peak. Like, you can see that they're going to be. So just to keep it a little bit cleaner, I guess we'll put that one. Sure, why not? Okay. So those are your horizontal levels of support and resistance. If Ethereum were to sell off, and this too. I would say this. Okay. So if Ethereum were to sell off, hopefully you'd get some support here at this low. You'd see if there's divergence or something there. If not, okay, it sells off, comes down to 2,000, right? That's this peak from back here. You'd look at that point to see if there's a reaction or some support. You fall below that, maybe, yeah, I guess you could maybe consider 1940, this peak back here from March 14th. Okay, but really like 2,000. I'm sorry, that's what, 1,700. 1,700 is like the major support. There's not really much else. I touched a couple times here. 1,900, I guess. I would throw that. All right, you had it once, twice, 3 times. Sure. All right, so there are your lines of horizontal support and resistance. Okay, and again, these are to just have in place for if it sells off, where you can expect support, and if it rallies, where you can expect resistance. Now that you have these set, you can start throwing other stuff on there. So just to start, all right, we'll throw a trend line here. Okay, we noticed back from here, touched multiple times. 1, 2, 3, 4. Okay, this is a valid trend line. You want at least 3 touches. This has multiple touches, valid trend line. So that upper trend line will also be a point of resistance. Okay? Now that we have all this set up, we can start messing around with Fibonacci and stuff like that. So since we're on the way back up, if we're looking for resistance, you go from the recent high, throw it down to the low. Go from the high up here, always left to right, Fibonacci. From the high to the low, now you have your Fibonacci retrace levels for this little local swing. And the reason that this swing is relevant is because, look, the trend line that has not been broken since December 1st, that's a strong resistance. So breaking that trend line would indicate a change, right? A change in the trend, a change in the narrative. It's been respected for so long. Breaking it signals to you that, okay, maybe we're in an uptrend. Maybe we're really going to break out and continue. You've also painted a higher low at this point, right? So you've got this low, now have the higher low going on, looking pretty good. Okay. So you see how this is starting to come together, but you're also in the retrace zone for resistance, and you can throw the moving averages on there. Okay, where you're also right at the 50-day moving average, which has been a point of resistance since December 9th back here. You haven't really truly been above it. You got above it a couple times before falling below. So you are at some major resistance right now. You're at the 50-day moving average. You're at the golden zone, which is the 50% retrace in the 618, just a common area for assets to reverse back to the downside. And you're approaching that upper trend line. Those are all strong resistances. If you break them, it is a strong break, I guess you could call it, right? And if you get a strong break on the asset, then you can expect strong movement to the upside. And you can expect the uptrend, which it seemingly is currently trying to paint here with this second higher low, as a strong uptrend. So the bottom might truly be in there. Cool. And that's what I'm talking about, right? And you would wait until it breaks that, because it will likely, once it does, come back down to test it and hold it. And then if you get a hold here, you dig, trade, bang. All right, then you get like the big moves, that kind of stuff. But yeah, it's testing some serious resistance right now. That's fantastic. What else can we do here? Okay, now I'm looking at it. It's in resistance. Cool. I'm going to move down to the oscillator. All right. Do we have any kind of... In this case, what we want is hidden bullish divergence. So we want to see... Now that it's got the higher low, we wanted to see some, like, a lower low on the oscillator. We didn't get it, right? So it's just bullish convergence. No divergence. Signal continuation. Same thing on the RSI, right? It's just convergence. Okay. So there's no hidden bullish divergence. Womp. You would like that. That would be nice, but there is none. So the thing to remember with these two, though, is Ethereum will follow Bitcoin. So if Bitcoin blasts off, just think of Ethereum as like a rocket ship with every single other coin attached to it. Now, that's a little extreme. Not every coin will perform when Bitcoin's going up. There are going to be ones that are just flat or whatever, do nothing, right? But generally, Ethereum being one of them, if Bitcoin takes off, Ethereum is getting pulled right along with it. So Ethereum will get pulled through this resistance. Just the way it is right now. Okay, so, all right, we've got the trend lines. We identified that there's no divergence. Okay, so there's not really a strong, there's not as strong of an argument, I'll say, because we don't have that continuation as far as the buying and selling momentum. Are you still with me?
Right.
Are you not entertained?
Damn. Why the gladiator's not popping up? But where was I? Right. Talking about getting up here. So now what can we do? Well, we can look at the chart. Right? I'll look at the chart and I'll look for M shapes and I'll look for where price is relative to major lows, major bottoms, right? I'll sit here and I'll grab this low and I'll go, where's the bottom at to that? It's like in the middle of the 1272. It's not really anything. This is around the 113. Can I get a harmonic at the 113? No, I can't, so I'm not worried about that. So then I look at this, right? I'm seeing this. I'm seeing high, a low, a higher high, and then a higher low from the starting point. Okay, that looks like a potential shark style M, right? So I'll take my harmonic here. A point, I'll put it at the high, down to that middle low, right? It's right around like the 6182, which is definitely, again, very common area for assets to reverse. Comes all the way up to the, the 1.3, all right, 1.383. As long as it's below the 1.618, it's pretty okay. Close to the 1.414. I know that that's a level. And then bring it down. Okay. 5186. Close to the 886. Goes to the 886, right? Pattern completion zone of a bullish shark. Interesting. Okay, and getting a reaction. Not fully there. The 886 puts you down around 2,000. I'd probably say more with this. Like the 786, close to the 113. All right, so a cipher perhaps. regardless, M-shape reaction, getting the higher low, interesting. Now, when I zoom in here, and I can get rid of this at this point, when I look in now, I can see that it's reacting, and I notice another M shape here. So I notice another M shape here. So you don't really have to even, you can just really just test it, draw it out. Here, okay, potential bat. Oh, Ethereum as well. Have a bullish bat harmonic. Okay. You'll get an eye for this stuff. Like perfect. Like look at where that wick reacted. Right at the pattern completion zone of the bullish bat. It's like perfect. After the move of a harmonic at a higher low, a confirmation low, really good. You would like some divergence there. You don't have it. Whatever it is. It's okay. But this kind of stuff, this confirmation low, higher low, accumulation, implies a good chance that you're breaking. Now, you haven't gone positive momentum yet. Definitely no bearish. I mean, we'll move to the 4 hour to see if we're getting anything implying weakness. No. Higher high in price, higher high on the oscillators. Okay. Above the 200 moving average on the 4 hour, above the 50 moving average on the 4 hour. Maybe the hourly is showing some weakness. You were getting some class A, not even on the R side. There's nothing. Even the hourly looks fine. It came down, held a 200 moving average before pumping back up into the zone. Ethereum will likely break this resistance. 50-day moving average. So I mean, here's what to look for. It looks good where it's currently at right now. Looks good. Chances of breaking that trend line are strong. And if you break the trend line, it's the first time you've done it again since December 1st of 2020. That is a very strong indication that the downtrend is over when you break that trend line. Pull back, hold it as support before continuing. Okay? You know what I'm saying? Pull back. Continue. Got it? Pull back. That's the way that it will work if this is truly it. But this is what you want to be seeing. I wish there was divergence, and there was no divergence even at the pattern completion zone of the shark, which I haven't seen usher in a true rally, a true bull run. I've always seen bullish divergence, which what makes me a little bit skeptical that this truly is the bottom and the run to all-time highs. But in the short to mid-term here, and I guess I'm talking like a couple weeks to like a month, this looks pretty damn does. And you gotta remember here though, if we're at like the pattern completion zone, the shark, I don't really think we even got to it. I mean, using the cipher tool it is, but we're just using the regular exit. That's right at the 1618, and then like a cipher, more of a cipher reaction with no divergence, but playing out pretty well. So the thing is that with the cipher, the bearish 5.0 doesn't really come into play. So I guess if it depends which tool you're using. I don't really know the major differences between the two. The cipher tool is supposed to be used for when C is higher than A. That's the one I would roll with. That one kind of implies that it's a shark. This is in fact a shark, then the bearish 5.0 comes into play. And the way to figure out where the 50% retrace is on the bearish 5.0, take your C point, throw it down to the low at your D point, Look for the 50% retrace. Where is it at? Right here. 3,545. Oh. 3,400. What was it? 3,545, 48 is the bearish 5-0 pattern completion zone on Ethereum, and it's where the 200-day moving average is lurking.
Oh my god.
Okay. So, in time, you could certainly see Ethereum back at 3,500 bucks, but there's a bear of resistance. And curious to see what the narrative is at that time. But yeah, I mean, you come up, reject, come back down, 2,800, hold it as support. Could be an entry there. Entry on the retest of the supply line if you do in fact break it. Okay. Always wait for confirmation.
Yeah, I've been immunized.
Got it.
It'd be a lot cooler if you did.
Hold up. Wait a minute. Something ain't right.
Okay. Let's take a look at the net. Had this golden zone set up, man. Rates, and here's the thing. Let me not be that guy that's like, oh, what pumped last 2 days? We're going up. It's done. We're good now. No, we're not. We're not good. And we can just move it to the weekly even. It's like, yeah, okay. So you're at the pattern completion zone of a pretty solid bullish shark, the 113 bullish shark. Pretty solid. You got a big hammer, okay? On the weekly, there is no bullish divergence whatsoever. Okay, so just throw that out the window. None on the weekly, longer time frame. On the daily, we do have Class A bullish divergence on the MACD and the RSI. Okay, we do have this trend line here. So this trend line is going to be the first test, and that's right up around 13,909. That's going to be the first test. If you come up and reject it and continue selling down, and at that point the negative momentum starts building again, meaning that the Class A bullish divergence was like a joke, you could also even throw RSI line down. You got an RSI trend line here too, so break the RSI trend line, break the price trend line. Then you have to get above 14,185. Right? These two peaks from back here. That is the major resistance. So as long as you're below that, it's crap. Get back above that, okay, sure, until the Fed comes out and says that they're raising rates again because they have to. But yeah, I mean, sure. But you need to break this trend line first, and then you have to get above 14,000. Really, you have to get above 14,243 before you can be saying that the bull market is back on. Now, the narrative being that rate hikes are going to not be as extreme, whatever you want to call it. Sure, my mic is on. It is. I would have been depressed if I did 52 minutes without a mic. But now that the narrative is like, oh, we might ease rate hikes, you know, blah, blah. Come on, guy. Yeah, I guess the money printer is back online, and, you know, we can bump and get a rally. Sure. I actually saw super interesting. Hold up. Posted in the Discord earlier today, but yeah, so like take a look at this. You see if I can try and if you can see it, it's pretty small, but if you can, right, it's the blue line is letting us know where we are right now in the current S&P 500. The yellow line is letting us know, what is that even? Price analyst. I forget what it is. It was like there was something going on with China at the time where there was uncertainty about diplomacy and geopolitical blah, 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 blah.
What the hell is even that?
But similar to what we're talking about right now, and now they're talking about rates easing, we could see a pump, a relief rally of this kind of magnitude, which would not get us back above the high, which would be the indication. We do not get back above. Look, it's the Discord. And let me join it, by the way. Join the Discord. Don't be shy. Come on, guy. Don't be shy. Here we go. Let me throw it in here. Yeah. Join the Discord, guys. And if you're liking the stream so far, hit the like and the subscription. Helps the channel be seen. And yada, yada, yada. You know how it goes. Anyway. Yeah, the daily Class A bullish divergence is nice. Okay? It is. Underperformance and rejection of the trend line will confirm how bearish this trend really is. Breaking it gets you back to these peaks. Breaking those. Now we're kind of interested. Now we're like, huh. Okay, alright, interesting. But again, it might just be a relief rally where any low, you might get back to like 15,358 before dumping. And I definitely see a harmonic. So after, and again, okay, let me take a look at this. This will be interesting. Hold on a sec. Because with the bullish shark, there's always the possibility for the bearish 5-0s. From the all-time high, okay, we've got our Fibonacci. Let me try this high back here. Retrace almost perfectly to where that double, that tweezer top bearish engulfing on the weekly was for that. Come back down. Okay. 8-6 gets. Loving this. It's different. Try with this. Or one. Perfectly. 50%. 50% retrace is about here. How much can... Minimum for the bearish shark gets you up to around 15,627. At which point, according to that schematic I just showed you, that's where we would have the real dumping. Okay, so maybe the Fed lets it go for a while because blah blah blah. You know, Russia and Ukraine, so we need to not raise rates. We know inflation is still terrible, but we know that if we raise rates, it'll probably just make things really bad for a little while, and we don't want to have to deal with that responsibility, so we're just going to keep the party going, inevitably making the burst worse. But that might be like, this might be the death zone here. Pattern completion, bearish shark after a bullish shark. But we need to break the trend line first, break that major resistance there. Until you're above 14,243, stocks are, for me, basically like off limit as far as like tech and stuff like that. But start breaking off, man, because there's stocks too. There's stocks and stuff that look good too, technically. So if it looks technically good, technically strong, savvy, I mean, I'll take a chance on it. But you need to be extra careful these days. Make sure you're using stops. The crap with the Fed and everything, dude, they could stop you out so quick. Just literally just change the narrative every other day. But yeah, here's a potential wave situation that gets us up to around 15.6. But you got to get back above major resistance, the moving averages, all that stuff to do that. So we'll monitor it along the way, but And let's move it to the weekly just so you can see what the hell I'm talking about here. All right, this bearish engulfing tweezer top off the 50 moving average. No divergence, just to turn into a giant hammer. It's like, all right, cool. Nice. Good, cool story, dude. Whatever.
Nice!
But, yeah, it's still not good until you're above 14,243. That, I mean, even from that tweezer top high, you throw a little Fibonacci just like that. Oh. 786 is right up around the resistance back here from February and April. A little bit of confluence, possibly. The 886 right around there, too. Does that have any kind of... not really. Well, this would be kind of interesting if we got something like this. Low to the trend line, to the pullback, to another 618 perhaps. Or... 886, right? That would get you just above, basically at it. So, I don't know. We'll see. If you reject this, get a pullback. See if the supports from back here. Okay, talking about this right here. From May 13th. See if that support holds and you rally up and break the trend line at that point. Maybe. And then you've got a bearish harmonic waiting for you up at major resistance. That we'll see. We have fun here. How we doing, guys? Anybody in here? Much as I enjoy talking to myself, man, it is nicer. There are other people. If you're in here, man, just say hello. Say what's up. What's your favorite asset? Your favorite crypto? What's your favorite whatever? Favorite commodity? Do you like lean hogs? You like soybean oil? You can take a look at pretty much anything. What's up, right? Propane, the chart is ridiculous. Lean hogs future. Perhaps filling a gap. Perhaps filling this gap down to 90. Okay. There is no bearish divergence. That's extremely overbought. Good lord. I need a pig or something. Yeah, this thing's probably going to paint hidden bullish divergence. Any low higher than this low back here at 86. This right here. Any low higher than that. So you come down, meet the 50 moving average for it. You might feel the gap. Even if you filled this gap, you could come all the way down and fill the gap. You would most certainly have hidden bullish divergence with a pivot at that point. For sure. And you also have some support, some peaks here. Yeah, dude, let's see it. Fill that gap, and I'll go all in on lean hogs. Lean hog futures at $90. 4 hour there. Cool. Because again, there's no bearish divergence. The 200-day moving average is down there too. Could be a dream. Could be a dream. Where we at? Day. The weeks. Gap. 20% on the week. Dang. Bacon about to get super expensive. Lean bacon. They're like a fat hogs. Just 50% of America. Hey! Frosty! Nice. Go back. Clean hogs. Take a look at the metals. Gold. Silver.
I love gold.
Broke that trend line. Love to see that.
Nice.
Look at that wick, right? We go to war, boom. People are freaking the F out. I mean, it was up. That's a lot for gold, though, to be up 3% like that. How about the wick? Wicked up all the way above these resistances back here from January and November of 20. See what I'm talking about? Highs, these peaks. Got it, right? You got above that before coming back down and closing below. Okay, whatever. You need to get back above this high, though. Fine. But you're holding on, okay? You're holding this resistance for the first time ever. So it was resistance back November 16th. You are now testing it and trying to hold it as support. Good. There's no bearish divergence whatsoever. 4 hour. Don't have hidden bullish divergence at this point either, or Class A bullish divergence. So you could fall below this if stocks keep like if people want to move back into stocks, they will move out of gold. They'll fall back below this support. You get it? You understand what I'm saying? And you'll head back down to 1833. This support back here, I do believe, was like historical. 1802 is like the support. These back here, like the major support. But 1833, a little bit more recently. Also a major resistance support. Fall below 1877, head down to 1834, which is where this upper trend line that you just broke is as well. Also want to hold that 50-day moving average will be down there waiting for you as support. Strong level of support. Okay. But yeah, the 4 hour doesn't look great. No like bearish divergence. There's just not hidden bullish divergence. Meh. Let's take a look at silver. Silver actually pumping a little bit. 4 hour. 4 hour can. What, 1.37%? Morning star at the 50 moving average.
Nice.
Cool. What happened to the music? Morning star at the 50 moving average. Not no hidden bullish divergence. Lower low. Oh. The music. Hold on. Sec. Get the music. In Glenbury. If we listen to this, might have. Apologies. But on the 4 hour, Morning Star, Japanese candle, is above the 50 moving average, holding it. Good. Very good here. Strong Class A bullish divergence on the weekly time frame is good. You do want to get above this high back here. You want to get above 25.32. You were for a minute before coming back down and closing. You want to get above that high to try and wipe out any possibility of hidden bearish divergence on a weekly time scale. This Class A bullish divergence is double bottom stuff, holding at major levels of historical resistance. Okay, so this is good. Accumulation showing, holding, really good. Holding 2145. Really nice. Okay. And not going to be like a harmonic, only reason being the same low. It's kind of whack. 50. But, I mean, if you want to give it a bat, that gets you right back up to... Why is that? Probably from... I don't know why I put that there. This gets you right up around there, around 28.33 in time. Wild, right? Silver. We're talking about moves like this. Now again, it's like the same low, so harmonic kind of meh. Wouldn't really consider it a harmonic per se. You might have one. Might have a butterfly going on here. 786. 1272 puts you around 2655. All right, that's gonna be distant historically from this support back here. 1, 2, 3 times at 2625. So certainly a level of resistance. So if you want it to get back there, hold 2379, rally back to the upside to 2613, right?
We want more money.
We do indeed want the money. But at that point, yeah, you got the bearish butterfly.
Nice!
We'll leave that there. What else? Platinum. Gloribus y Plato. Get that off the screen, sorry.
I
didn't mean to hit the hell can she slap, just Frosty. Platinum. Own little wave structure here. Look at it on the weekly. Look at the Class A bullish. Look at it. Divergence on the MACD, on the weekly, and on the R. Beautiful. Okay, continuation on a weekly time. Platinum to the upside. Pattern completion zone puts you at $12.13. Well, what did Platinum come out in the year 2018? And this must just be a new ETF, I guess. But that weekly looks really good. So over weeks, right, over time, over months, you could see Platinum really get up to that pattern completion zone, 1221. And it would look like this. Flagging all over. Hold on.
Psych!
It would look like something like this. Okay, before it gets there. Okay, it's not just a straight up shot. You'll have you've got a resistance point here. This peak at B gonna act as resistance again at about 1083. But this is nice, pretty nice as far as wave structures go. So that weekly divergence is fantastic. You had it on the daily as well. So same thing. With the lower low in price, with the higher low on the oscillator. You had it on the MACD just continuing to as well. Really good. Exhaustion of sellers implied, and now moving to the upside. You are not overbought on the daily time frame. Not overbought on the weekly time frame. In time, yeah. Trying to currently hold the 200-day moving average right here. Okay. Holding, testing, holding. This thing on. Testing. Okay, hold it. Continue up. To fame and glory. All right, at least get above 1083. Get above 1083. Okay, and then it's like, all right, we're most likely going to 1219. All right, even if you get a slight pullback and then hold it, right? That could be the entry. Or heading up there. It's a gain of what? 13%. Position would look something like this. With the stop loss right below. I don't know, risk a percent or something, right? For a 13% gain. I mean, you don't have to be too greedy even. Set it off a little. Risk 4%. All right. Live a little dangerous. You've been good this year. Pattern completion zone. Right up around here. 3-1 odds. Okay, so that would be a nice entry. Be a nice entry at 1083. If you break above it, come back, hold it, and then have some hidden bullish divergence or something. Yeah, that'd be. Okay.
Are you not entertained?
Are you guys having a killer time?
Yeah. Cool. What else? Lithium had a good day. It might have an ABC type of thing. 8. Maybe to the 886. I'd say maybe at the very least, perhaps. The 618 puts you right at the shoulder here. This resistance confluent with this resistance back here from August 12th, my birthday.
So you're telling me there's a chance?
That would be, this would be nice. You could definitely see something like this. Let's take a look, see if there's divergence or anything. There certainly is. Certainly will. Thank you, Seth. Hey. Thank you. Okay. Class A bullish divergence on the MACD and on the RSI. You are back above this major resistance point back here from February 16th.
Nice.
Stay above that. You moving. You just have a death cross on the daily though, so it's like what I'm talking about. There's a lot of conflicting variables going on. So it's kind of tough with the narrative because it's war, no war, rate hike, no rate hike. Taiwan, maybe? I'm out of juice. I'll be right back. Gonna go grab a beer. Back in one, guys. Appreciate it. Thank you for everybody in here because this has been a lit chat. Try to keep it down. Well, be right back. All right. Where were we? What was I talking about here? I was basically saying, yeah, the ABCD to the 618 common retrace area. And to see that, you can just go ahead and throw the Fibonacci from low. Okay. Right up at the 618, confluent with that resistance back here from August 2021. If they're talking about not raising rates, stuff like that, type of environment, sure. But again, just at a death growth. Lithium, batteries that go into electric cars and stuff like that. Look at me, stock. GameStop, dude. GameStop is developing hidden bearish divergence. On the MACD and on the RSI. Continuation to the downside implied. You would just come back to 87.32. Testing that again. Yep. Okay. Left. Is there any other point? 3. That was an important level. Probably because they offer you $2 for your house. You could offer them your house, and they'd be like, best I could do is $8.42. But it's going to be taxed, so I could give you $2. The home's worth $200,000, sir. All right, I could do $4. I could do $4. Yeah. You got to throw in like a Xbox controller or something. But yeah, the daily implying continuation to the downside on GameStop. Like looking at these meme stocks, but hey man, whatever. We're just chilling here, right? Breakout of a little trend line that you had going back from November 23rd, and you did have hidden bullish divergence going on a MACD was developing. Down here. Lower high on the oscillator, higher low in, I'm sorry, lower low on the oscillator, higher low in price. Only on the MACD though, which is why it's probably pathetic. It's not playing out well. So yeah, fake out, breakout, potentially. You got the 50-day moving average coming in to try and back you up, but ultimately it probably come back down below, especially with that daily bearish divergence developing still. You're probably going to come back below that trend line and continue the trend back down to $86.80. Okay, unless they really turn the money printers back on. GameStop down at $86. Yeah, let's see. Maybe you have a harmonic or something down there. Six, 5, 3. Really there. Meh. You want it to be, but it's not. Harmonic. Major, that's the other thing too, man. It's like you just had a major bullish engulfing candle today, right? Yesterday? That was yesterday. Major bullish engulf candle. I get it. It's like a crap candle because this is the war candle on GameStop. Everybody's just buying the dip on the war, and they're just buying literally everything. And it bullishly engulfed pathetic follow-through price action. Right? You couldn't get it back above the 50-day moving average after that. Crash. Hidden bearish divergence developing. Go back to $86.80 where you belong. Let's look at AMC, because why not? Again. AMC. That's like old setup here, I guess. Same thing. Hidden bearish divergence. Slide. You didn't even get close. You had to make a higher high than $30. Didn't even get close. You might be, though. And here's the thing, right? Another trend line. Something like that. Break above the trend line, and I'm seeing a kind of W structure going on here. Sure. Create 2. Down to the 786. Alright, so maybe you get a bullish bat type of thing, given the context of what we're in. You break out of this upper trend line, yeah, maybe you get back up to $30. Sure. If you could break that trend line. I mean, god damn, that's a 60%. I don't know about all that. Hold on. Huh. Hold on a second.
Hold on.
Do a kind of resistance. Yeah, okay, yeah, I mean... right here. Trying to hold on to, I don't know that you get past 2158, right? This resistance back here, this is kind of a pipe dream. You got to get back above 2145 as well. But I mean, dude, anything's possible. You break this trend line because you've been respecting it since November 15th. Possibly you get back up to $30, but there's no edge, right? There's a bearish edge. Continuation to the downside implied, so what do you really think your odds are of breaking this trend line, going bearish divergent on a daily time scale? They're probably pretty low. Okay, let's take a look at Robinhood. Double bottoming, interesting. This, dang, dude, imagine buying the IPO at Robinhood. You would only be down. You'd only be down roughly 71%. Not bad.
Nice.
Not bad at all. Okay, right. You put 10 grand in there. You're only down about 7,000. Course of how long would that have taken you? Melt your face off. It would have been about 186 days. The bottom hit about half a year, 6 months to lose 70% of your money.
That's not good enough.
Object to the test!
But you're double bottoming, for sure. Not only are you double bottoming, I can say, do I like that divergence? Is that a bullish engulfing candle? Sure. It was. Can't argue that it was not. Okay, so here's what's going on with Robinhood. Double bottom. You technically have Class B. Or hidden bullish divergence, kind of same low, lower low, but so it's kind of weird. It's like you've got it kind of, if you really want to measure it from the real negative momentum, you do something like, okay, so you have Class A bullish divergence going on. Yeah. You also have it make these a bit bigger. Yeah. Dude, here's the thing with Robinhood. you have massive Class A bullish divergence going on. Double bottoming with a bullish engulfing candle. The position would be this. If you were to buy it now, so, dude, I don't understand. If you were to go in on Robinhood right now, you're looking at stop loss would just, God dang, dude, what the hell? Yeah, I mean, your stop loss would literally just go like right below where you currently are right now. Okay, I mean, get it as tight as you can. I don't want to risk 15% on crap, but that's like as tight as it gets, I guess, on this low. But your first target would be right here, 2.16 to 1 odds. Meh. 33%, risking 15 to get 33. Dude, I wouldn't take it. It's at a double bottom, low risk area, yeah, but I wouldn't take it just for the fact that 2 to 1 odds are not really good enough for me. I don't want to risk 15% on crap like Robinhood, especially since it's just been straight down since its inception, basically. Before it had the nonsense when it IPO'd, but since then it's been an absolute loser. So I'm not banking on the fact that Class A bullish divergence on a loser like this is going to out favorably for me. This, as far as a trend line resistance, so your first real major resistance is going to be up around like 1228 if you can break the trend line. If not, where you are from the IPO as far as Fibonacci is around the 114. I mean, you can go down the 1618 down at $1.05 at $1.08. That would be a little further, 88%. Okay, that's a little extreme. I don't know about all that, but move it to the 4 hours, see if we got anything over there. This is what's not good about the 4 hour. There's no divergence on the 4 hour. The 4 hour is where we want to take the trade. So there's not even Class A bullish divergence on the 4 hour. It's like it's there on the daily, but it's not there on the. You don't want to touch this crap, man. Okay. You do not want to be touching Robinhood. This is just a loser, man. It could rally here. Yeah, I guess. But dude, nah. No thanks. I'm out on Robinhood. It is not good enough.
That's not good enough.
Look at Doge. Why not? Going through all the meme assets today. Doge did not perform well. A lot of other coins that were rallying. What did it? Doge was up what? 0.82. Big hammer. Obviously, like a lot of coins did. Just hanging out in the middle of literally nowhere. There is no support looking left where you currently are. None whatsoever. At all. Point blank period. Until 8 cents. Until 8.7. There's nothing. You are developing Class A bullish divergence. Sure. Okay. Starting to. Yeah. Price action's pretty weak compared to a lot of the other coins that we've been seeing. You do have it on the RSI as well. Like a lot of other things, yep. But dude, like, do you really want to be touching coins like Doge, Shiba Inu, stuff like that during war news going on and inflation? And you don't want to be crap, dude. Who is buying Dogecoin in an inflationary environment? People are moving like gold and stuff like that. Doge will go to 8 cents. If Bitcoin rallies and makes that run up to 50,000, okay, Doge will probably catch some of the love and head up to 16 cents instead to test that major, what was once support as resistance, these 3 points here. But, dude, I'm not buying Doge. I don't care, really, what the oscillators. I'm not buying Doge in this flip-flop environment where they could come out tomorrow and just be like, psych, we actually are raising the rates, and yeah, we're gonna raise them even higher than we said we were before.
Psych!
It's crazy, dude. If I saw Jerome just a quick, he would look at me.
Organization!
I'd say I'm a he, sir. My pronouns are he, him. You probably wouldn't know what to say. Sometimes I go by that guy. But, yeah, it's got the Class A bullish divergence on the daily. Cool. Doesn't have it on the 4-hour.
Nope.
No thanks. Let's take a look at its little brother. Take a look at Shiba. I would never advocate for this. I don't care how good it looks ever. I'm never advocating for Shiba. I don't care. I don't care if I'm transacting in Shiba. I will never tell anybody that it's a good idea to buy this. This is a spin-off of Doge, and Doge is a joke, so this is a spin-off of a joke. This is ridiculous. Oh yeah. But we'll take a look at it for fun. Zoom in on the MACD a little. Oh. So it's just confluence, no hidden bullish divergence to signal the continuation to. You are holding this support level from back in October 15th pretty well. Okay. Onic or something. 786. The only thing you could have is either a cipher or a Gartley. Not have a cipher because C will be lower than A. Do not have a Gartley because B did not go to the 618. It's something like this, then I'd be saying, okay. I would literally be, I would be this guy.
Okay.
But you don't, right? You're up here around the 411 at the 786. It's literally nothing. It's not a harmonic. So, again, Bitcoin pumps. Shiba might get a pump. Okay, but I'm not investing in Shiba Inu coin because Bitcoin might put it on its back. There's no bullish divergence. There's no edge on the daily. There's nothing on the 4-hour, right? Yeah, there's no Class A bullish divergence on the 4-hour or anything. If it explodes, cool. I'm not touching it. I wouldn't touch it even if it did have it. We'll throw a trend line on it just because. There's your trend line. Okay. That'll get you up around, what? 2.91 trillionths of a penny. Cool. Anybody in here? If you're enjoying, hit the like button, build a sub. Thank you. This is interactive as well, so if you want me to take a look at an asset, any asset, stock, crypto, does not matter. Throw it in here for the love of God.
And it's gone.
And I'll do a free analysis for you, man. Okay. Take a look at Coinbase. No edge on the daily, right? Negative momentum has not started to shift to the downside. Class A bullish divergence potential is there. If it can start to shift, hasn't yet. Especially after a big green candle like this, kind of pathetic. There are a lot of assets that got the exact same candle and have been pumping and doing well today. Coinbase was down 1.5%. Terrible. I wouldn't buy this with your money. Whoever's watching, I wouldn't buy this with your money. You gave me your money. If it was my birthday and you gave me a birthday card and the card said, but you have to use this money to buy Coinbase, I would return the card. Because I wouldn't want to even fiend with this asset.
What the hell is even that?
You're at all-time lows. Okay? You're at all-time lows. That's all I have to say. And I'm not talking about the band. Listen to, let's take a look at Peloton. Peloton's probably effed as well. Forget if Peloton, did Peloton get scooped up by Nike or Amazon or Apple? One of them were up. Peloton on the daily. Pumped. Who the hell is buying Peloton?
Yeah, I've been immunized.
Yeah.
Maybe you do.
Who is buying Peloton? Really? They're about to lift, I saw they're talking about lifting like all mask mandates by Friday, like 70% of the country. And we're talking in schools, we're talking in restaurants, everywhere, right? They're easing way back on the COVID restrictions. People will start going back to work, you know, all that stuff. People are not buying Peloton bikes anymore. Who is investing in them? Oh, goodness. I think I can make some money on Peloton.
Oh, do ya?
Pathetic performer. Big candle, minus 0.39% on the day. Negative momentum building. No edge on Peloton. Look at how pathetic. Look, this is something to note here. You had hidden bullish divergence, like big hidden bullish divergence. Okay, on the MACD and on the RSI. As price or as momentum was shifting towards the upside, where was price going? That is horrible. That's terrible. Hidden bullish divergence is supposed to, once it starts to pivot here, right? Once it starts developing here, supposed to continue to the upside, continuation. The fact that it continued down is horrible, man. That's a really bad sign. It's literally like divergence of its own. Hidden bullish divergence turned into bearish divergence. Just bad. Really bad. I wouldn't touch this crap with your money either. I don't know if this was the same asset I said that. But yeah. Moving on. Doge killer. Just to laugh at it, right? Funny. Part of the meat stuff. Let's take a look at Miami coin. This is the official currency of Miami, the city of Florida. Since its all-time high, it is down about 93.49%.
Nice.
Nice.
Pretty good, pretty good. Not doing too well. I don't really know what to say. There's no reason to be buying this crap either. Take a look at the weekly because we can. Imagine getting in at 5.7 cents. Probably hate that city right now. You're talking to Putin like, hey, if you're sending one our way, you start with Florida. Little city called Miami. You ever heard of it? Start there. You could call up Cuba. They're a little closer. Maybe they could, you know. I'm 93% down on my portfolio, damn it. Crap. Absolute crap. All right, let's get back to the cryptos. Let's take a look and see what Bitcoin's doing. This is the Wyckoff thing that I was talking about, right? Okay. That point gets back to 50. The bearish 5.0 is there. But, Lord. This is the bearish 5.0, by the way. Right at 50,000. Again, for anybody that's new in here, whatever, then seeing the beginning of the stream, right up around the golden retrace zone from the all-time high to the low, common reversal area, 200 moving averages up around 50,000. That is the spot to reverse in an accumulation phase to send us back down to a lower low than 32,000, which would be dream entry as long as we're not at war and blowing up at that time. Okay? That's kind of the Debbie Downer in the room. Is I don't know. Are we gonna blow up? We get drafted. No. Video got hacked too. I saw today. Not Russia related apparently. Apparently they said it didn't have anything to do with Russia, but oh god, man, got hacked, dude. What the hell's going on? I'll tell you what I did do. I did go out and got a petite but functional generator, which can charge a laptop, a phone. And then I also went out and got a solar panel for it. So it was about, a couple $100. Your boy's officially off the grid. I can't plug a fridge into it. I can't power the house, but I can power a phone and a laptop. I need. As long as I can do that, I can get on here and do technical analysis while my house is targeted by a cruise missile or something. Ethereum, what are you doing? You're testing the 50 moving average still. Much goings on. Let's look at the all-time highs of it. Tezos. W structure, it's certainly talking with low, double top. Not going to be deep enough, so let's do a little more recent of a high. Not really. Harmonicness. High. Same low on the oscillator. Divergence on the trend line. This trend line being respected. Go. Dang, dude. Since October of 2019, this trend line on Tezos being super respected. That's nice. You do, though, certainly want to break this trend line. 50 moving average, this trend line, and horizontal resistance looking left. Yeah, this peak back here from February 20th. That's going to be the major resistance that you're looking to break above. Again, breaking that trend line is indicative of a true reversal of this this downtrend that you have. So Tezos. Hey, 127. No way. A little bit deep, but I mean, dang, dude, that's a pretty nice shark. At the 886 again, right? And of course, I can just 86 from the high. Excuse me. Type 2 return. Damn nice. Excuse my French. Look, the weekly. And one that's really been respecting that trend line, man. That's good. Yep, no bullish divergence. If you pivot here and continue and make a higher low than here, then yeah, you would get it on the RSI. Sure. That's pretty good, man. Looking like a lot of other altcoins, but yeah, developing up. Technically close, man. Close to a same low, higher low on the RSI. That would be a Class B. B as in boy. Balloon. Bullish divergence. Look at Storage, which is pumping a little bit. It's at $1. Major psychological resistance point. Class A bullish divergence, though. MACD and the RSI. Like, this is what I'm talking about, man. This is what you want to be looking for a true reversal of an asset. You really want to be looking for divergence on both MACD and the RSI. Lower low on price, higher low on the oscillators. Beautiful. This is like a class, just a almost too obvious W going on here. Comes up to like the 618, 1272, V886. Puts you right up around. Be at here. $1.65.
Nice!
Alright. The wave pattern for storage. See? Yeah. All right. Let me move it to total real quick. Total market cap, which again, need to break this upper trend line. 50 moving average. 50-day moving average. $1.848 trillion. Also, these a resistance point back here from March. Resistance point here. Support here from September. Support here from January. So support here from February 12th. So it's a strong level. Right around where the horizontal resistance. So very strong level of resistance. If you do in fact break it, bull run might truly be on. Very possible. Okay. Then see stuff like that. It's on. And no resistance. There's another one. Okay, then you come down. You hold the prior support and before breaking the next. You know, that's just how it goes. So, yeah, on the daily. No bullish divergence. The daily. Take a look at the weekly. Do have some slight hidden bullish divergence on the weekly. Nothing on the 4th. You just don't have bearish divergence though. Good. So, guys, that's gonna do it. All right, I'm done. Live about an hour, 52 hours. Felt like 10 minutes. But there's slow. I'm gonna get going. Enjoy your Friday night. If you're watching this, appreciate it. Thank you for the support, the love, the like button, the bell, everything in between. Join the Discord. Link is in the chat. Follow the Instagram, the Twitter, all that stuff. Yeah, I'll be back on Sunday to do a quick little updates going on. But till then, yeah, enjoy your weekend. Real, keep it technical. Keep it technical too early, but keep it technical, of course. It's spontaneous, but most importantly. All right, boys.